everyone, I'm Frank Malakut. I'm an anchor and a reporter for KTVU Fox 2 here in the San Francisco Bay Area. My guest is a financial planner and the principal of California Financial Advisors. That's in San Ramon in the East Bay, here in the San Francisco Bay Area. She handles over $1 billion in assets and is the perfect person to shed a little light on the economy, the stock market, and the stimulus, if and when that ever happens. Let's say hi to Michelle Perry Higgins. Hi, Michelle.
Hi, Frank. How are you?
Good to have you with us.
Thank you.
I noticed you on network TV yesterday, and that's how this all kind of worked out. But let's talk about stimulus. Right now, it's still on hold. They're going back and forth. But yesterday, a simple tweet by the president caused the market to crash, saying we're pulling out from negotiations. And then on
Yes.
second thought, he had a mea culpa later last night. What's going on, and where does this sit?
Yeah. Unfortunately, we have seen in 24 hours the true definition of a stimulus whiplash. And unfortunately, no American or businesses, airline businesses really right now should be going through this. And I'm calling this more of an aid than a stimulus. The American people right now need stimulus so bad. Going into this year, into this pandemic, only 18% of the American people had enough money to last 6 months on their emergency reserves. So 82% of Americans were not ready to lose their jobs. And it just shows right now the urgency. We have to get a stimulus package out there. We've got to get the talks going. Unfortunately, Trump, I can't get into his head to try to understand why he tweeted that, why he stopped it, why he restarted it. But there's no doubt it has to happen now, and we cannot and shouldn't wait until we have a president, which has really kind of been the debate over the last 24 hours. Are we now going to have to wait? It can't wait.
It almost seems like art of the deal. If you read that book,
Yes.
I don't like it, I'm pulling out. That'll bring people back in. And then suddenly he discovered, wow, I can't believe the market dropped. It did a complete reversal.
Right.
After a simple tweet.
Right. Because remember, Frank, the market is driven on stimulus. That is one of the factors, and we'll talk about, it's not driven by presidents, but it is driven by stimulus. This will help the economy, will help the American public, will help airline industries. It will make a dent.
And you touched on this a little bit, but those that have stocks and 401ks, which is probably not a majority of America. There are people out there that are hand to mouth, that have two
Yes.
kids, that have a mortgage to pay or rent to pay, that have been without any stimulus since August 1st. And sometimes you wonder if Congress realizes, while they do what they're doing, I mean, people are actually suffering out there.
Suffering greatly. Yes, I've had many calls over the last 6 to 9 months saying, I need to take a withdrawal from my IRA account to help my son, he's out of a job now, to help my daughter who no longer can pay her mortgage, and I don't want her to lose her home. So what's ultimately happened is money's had to flow from the baby boomer generation to help their children. Thankfully, many of those folks do have family members to help them, but there is a whole bunch of folks out there who do not have that. And that's why this aid has to be pushed out ASAP. I urge Congress.
And do you think it'll happen before the election?
I do. I think because this is such a level of make or break right now, it's not an option. Americans need this.
Does it matter who wins for president? Will the market, it's certainly going to react, but long term, a Democrat, a Republican, Trump, Biden, a lot of people are worried if a Democrat takes over, that's not good for big business. Things will change.
Yeah, this is a constant, I would say, conversation in my office, and it's a good one. We have to be having this because, and I even had to go look at history. What has happened? And Vanguard put out a great piece over the last 158 years with a 60-40 portfolio. What did a Republican president do versus a Democratic president. And the returns were very close to one another. A Democratic president came in at 8.4% and a Republican president 8.2%. So you're talking 0.2 difference. Is this going to be a different election? I don't necessarily think that a Trump Biden is any different than the last 158 years, but I do believe there will be volatility, as there always is, and it's magnified right now because of all the other factors we have going on, primarily the pandemic. It's magnified right now. There will be short-term noise over the next few months. And what I urge investors to do is, instead of worrying about Biden winning or Trump winning, taking a step back and looking at their portfolios and saying, okay, am I at my goals, my long-term? If I believe in the long-term viability of the market, am I at my goals? Growth has had a great run this year. There's a lot of profit we could take in that quadrant of their portfolios. Have I taken my profits? Do I want to maybe get a little more conservative, or do I want to get a little more aggressive? What do I want to do going into the election? Because if you, and this is what I ask clients, if you had to go through March again, but March went on for a year, which would be a bit heartbreaking, but let's just say it went on for a year, could you get through that? Do you have a portfolio that you could get through that without panicking and jumping out of the market? That's the $1 million question. And how you put a portfolio together to get folks through that is something we call the defensive barrier, where you have a chunk of whatever your clients will need to live on, whatever the investor needs to live on to get through a cycle in fixed income, bonds, and cash. And so if the stock market does go through another correction, you safely know you have your income needs set aside. And so you could somewhat, not that I'm saying the anxiety is going away, because this is an anxiety riddled year,
Yes.
but it tapers the anxiety, Frank, where folks know, okay, I feel peace. I have my income set aside, and I'm not going to stress if Biden wins or if Trump wins as it relates to my money.
I know I called my financial planner in late March, early April, and I said, wait a minute, it's taken me a lifetime to grow this, and it's going out in
Right.
buckets, hold the horses, pull out, and he goes, you know what? And what he told me is, back in 2008, when the market crashed during the recession, if you had been out maybe a dozen days in the market, you would have lost out on like over 50% of recouping what you lost. Mm-hmm. So he just said, stay the course.
And it's hard.
It'll come.
Yeah.
But my goodness, it's hard as, someone that, makes a buck, puts it away and expects it to grow. And all of a sudden it grows so slow, but it can
right.
the door. So
right. March was a very swift and ugly and breathtaking drop. The rebound, as you just alluded to, you miss out on that kind of rebound that we just saw, and it could take you a decade, 2 decades, depending on how you traded out of that, to make that back. So market timing is definitely not a game I would play, nor have I seen a majority of folks win that game going into this kind of election.
Let me ask you this. Unemployment's still double digits. A lot of people out of work. Here in San Francisco, a lot of businesses are shuttered. Many aren't coming back. But yet the market is soaring. Why?
Yeah. And it's interesting. I just read the Fed minutes before our interview, and it came out that 3/4 of the economic activity has been brought back. There is no doubt, though, so that's, the good news. There's no doubt, though, that there has been structural damage done to our economy, which will take time. But we have to remember, the stock market is always forward looking. The stock market today is pricing in what's going to happen 6 months to a year from now. The economy is looking in its rearview mirror at what we've just gone through. So that somewhat explains the disconnect. The stock market right now is cautiously optimistic that next year we're going to be in a better place, as am I. I'm cautiously optimistic that the end of this month, our vaccine trial results will be good, that by summer of next year, we are in a lot better place than we are in today. But you're right, there's a big disconnect, and it will take the economy time. The Fed is continuing to do everything possible, use every bit of tools, low interest rates, buying long-term bonds, short-term bonds, whatever we have to do to keep this economy from going in a Great Depression or a serious, long, extended recession.
What would a vaccine do to the market?
Definitely a vaccine we will see some excitement in the market. It will be a good day for you.
Maybe a
You
good.
will enjoy looking at your portfolio that day. Yes.
Yeah, you'll be getting a lot of good phone calls.
Yeah.
Um,
Thank you.
we can all hope.
Yeah.
How about some advice for middle America? We talked about it. You got a couple of kids, maybe one in college. You're not hand to mouth. You got a 401k cooking. Just stay the course. Hang in there. We'll get through this.
I think absolutely this is a time where meeting with your financial advisor, reviewing your goals, reviewing your portfolio, resetting, making sure everything's clean there with your financial plan, critical. Number two, I would say emergency reserves. This was a year we saw how critical emergency reserves have become. Many clients are saying, I'm not spending as much as no one's going anywhere. Instead of spending those dollars, kind of pilfer them away in emergency reserve if you can. And definitely stay the course. Continue to hang in there. We will get out of this. If we happen to see a good correction, take all those pennies you saved and invest them, because March was a great example. If you had a little money sitting on the sidelines and you were able to rotate that into the market, those were great buying opportunities.
I know it's hard. You're supposed to buy in the dips and sell on top, and a lot of people do it. Oh my God, I'm losing money. I got to sell right now.
Right.
So I don't lose any more. But I guess you got to see those dips as buying opportunities to get in at a better price and stay the course, because most of us are in it for the long run.
Correct. Yeah.
All right. Well, I know you're the author of 3 books, and why don't you tell us what those are and share that? And if people would like to get in touch with you, how do they do it, Michelle?
Great. My website is michelleperryhiggins.com. I have 3 books, one that has been very popular in the midst of this pandemic. It's a binder book called the Everything Binder book that is used if you pass away. Everything you need for your heirs is in that book. Also, I wrote a book for college students called College Poor No More, and then another book for moms called Stocks, Bonds, and Soccer Moms.
And you're the mother of how many kids?
2 teenagers.
All right. What do you do in your spare time?
Yeah, exactly. Oh,
I want to thank you, Michelle Perry Higgins, for joining us. Some great insight on the market and hopefully what lies ahead. Thanks so much.
great. Thanks, Frank.
Good to have you. I'm Frank Malicote. If you'd like more information, go to newsnowfox.com. Have a great day, everybody.